Good evening, everybody. Today is Tuesday, the 31st of December, 2013. The market is closed for the year, and we had a great year. Hopefully, your accounts did as well or better than these indices, but let's take a look here. The S&P 500, not including any dividends, was up just under 30%. NASDAQ, 35%. Russell 2000, 36%. So just some really big numbers this year, and a lot of people will tell you that it was only up because of the Fed, and whatever the reasons are irrelevant. If you finished the year with 35% more money than you had last year, why would it matter what the reason is? The reason is because prices are going higher and they're buyers of equities. As long as that trend remains higher, we're going to continue to look at it as innocent until proven guilty. And gold, which was down 28%, bonds down 16%, are in downtrends, and they're guilty till proven innocent. So looking forward to 2014, we're not going to expect anything to change dramatically just because we changed the calendar. We're in uptrends, and we are getting a little bit extended here. What we're looking at right now is the S&P 500 from January 1st of this year and the volume weighted average price. You can see how important that volume weighted average price was as support for the first half of the year, where we saw a couple tests of it. One after a pretty steep pullback here that we did see the market recover from those, and now we've been riding this rising 50-day moving average. So we remain innocent till proven guilty. It's easy to look at this market and say, you know, it's up too much or it needs to correct, and that may be true, but the fact is we are still in a primary uptrend. Looking forward to the next couple days, I think that our 183.50 is our primary level of support for the intermediate term. As long as we remain above that level, then it's innocent till proven guilty. We have the rising 5-day moving average there, as well as this prior support. The NASDAQ is up 57 cents today, and we can see that this market as well. Well, let's take a look at that volume weighted average price. It's way down here at 74, meaning the average price paid for the NASDAQ 100 this year was $74.32. So we're well above that, and you could arguably say that that's why we need to look for it to pull back some. But until the market actually shows evidence that it's pulling back and really making a pattern of lower highs and lower lows below significant moving averages, we're going to continue to call this market innocent till proven guilty. So intermediate term for the next couple days of this week, I think 87 is what we want to see hold. If we see, even if we see a pullback down to there, we want to get a little bit cautious because it's possible that the market could then rally up and find resistance at the 5-day moving average, which would be flat, but that's looking a little too far ahead. Right now, let's just say we want to see 87 hold for the intermediate term. If that fails to hold, then perhaps we come down towards this 86.50 level, but there's nothing indicating that this market is going to pull back or is due for a pullback other than the fact that it's up a lot. And being up a lot isn't a reason to sell short. It's a reason to say, okay, I'm going to tighten my stops and and just manage risk, but it's not a reason to fight the primary trend. The primary trends have been higher for a couple years and remain higher. So the people who have fought the trends last year maybe are hoping for something different in 2014, but hope is not a strategy that pays. Neither is fighting the trend. What pays is paying attention to what the market is telling you in the here and now, being long rallies in a primary bull market, stepping aside on pullbacks, and listening to the message of the market for its cues. So as long as we remain above 114.75 in the Russell 2000, then I think that we continue to give the benefit of the doubt in the intermediate term to the buyers. Semiconductors have broken out and continue to rally here. So this market has been in a great uptrend this year, and let's just take a look at the number because I wasn't sure what that was. For the year, semiconductors were up 31%, and they're showing no signs of slowing down. They, we had a little bit of rough patch over the last 3 weeks or so ago, but we've broken resistance here at this 42.25 level. That is what I consider to be the intermediate term level of support we want to see hold. That is basically where we see this prior resistance, and we have a pattern of higher highs and higher lows above a rising 5-day moving average. All the same themes that we've spoke about throughout the year we'll talk about next year as well, and we'll continue to say that it's innocent till proven guilty as long as the market continues higher. And if the market tells us that we need to be more cautious at times, like it did this year, then we'll become more cautious. But we won't become bearish until we see the markets below their declining 50-day moving average at a minimum. But realistically, even there, we have rising 100, 200, 150, and 200-day moving averages, and those are the downtrends. That's where you want to be short during these periods. You don't want to be short while the market is above all these rising moving averages, despite what the news is. And 2013 was a great year to remember that, the reason I own the URL onlypricepays.com is because the news can distract people so much, and we saw it this year that a lot of people got shaken out of stocks over and over again with different headlines from various parts of the world and from Washington, and none of it mattered. At the end of the day, not one of those news stories mattered as far as making money. I guess that's maybe being a little bit too dramatic, because they do matter in helping shape the psychology of the market, and we saw some pullbacks, but there were pullbacks within a primary uptrend, and the market has really climbed that wall of worry all year. The financials, 2160 is our key level. That as long as we remain above that, the intermediate term is innocent till proven guilty. Let's take a look at gold. We gapped down this morning and did close with some of the with a gain here, but for the year, again, we saw that gold was down 28%, and pretty much all year I've been saying that we're guilty till proven innocent. Once we broke this level here, 150 in particular, 150 to 155, that's where the trend became very apparent that the sellers were in control and we were due for a deeper pullback. I still think that, even though we saw a new low for the year in gold today, it's still guilty till proven innocent. You might see some bounce in here, but I don't think it's going to be any different than any of the other bounces that we saw this year, that they're guilty till proven innocent until the market can see the longer term moving averages flatten out and then begin to turn higher. And if we have a pattern of higher highs and higher lows above those moving averages, then we'll call it innocent till proven guilty. But why fight the trend? Why get that? Why get in $1 early? I'd rather get in, I'd rather own it at 130 than at 116 if I know that the momentum is in my favor. I don't want to own it down at 116 while it's still declining, and that's what trend trading is all about. The TLT, this is the 10-year bond note, and this is, I think I saw first time since 1991. That may not be right. That the bonds lost. Had a down year. They were down close to 16%. The TLT. This is a 20-year blended bond average, and you can see it made a new low today. It didn't close at it wasn't a closing low today, but we did make a new low, and I've been pointing out for a large portion of this year the Head and Shoulders top pattern, which indicates a price objective down near about $92 a share. So I still think bonds, they're in a primary bear market here. The 10-year bond is in a primary downtrend. It's in its own little bear market, lower highs and lower lows. There's nothing here indicating that it's turning. If they don't scare you out on the way down, they'll typically wear you out. So that's where we are heading into 2014. I have a list of stocks for the January effect, which I'm sending out to subscribers of Alpha Trends, and there's also a post on Alpha Trends about the January effect, where if you want that report as well as follow-ups for the next 3 weeks, we're also doing a webinar on Friday. The price is $49 if you're not a subscriber to Alpha Trends. If you do subscribe to Alpha Trends, it's a free part of the service. So hope again that everyone had a great 2013, and hoping that 2014 is better for you in all aspects of your life, not just trading. Don't forget there is life outside of the market, so enjoy it. Thanks.